If you don't understand this one key concept, you will never make money trading. It is surprising as hell how many people will open up a prop firm account, open up a live account, and trade real money, and they don't understand this one key principle. Imagine getting into a car, okay? You know how to drive, you have your license, you know how to put gas in the car, you understand basic car maintenance, but you hop in the whip and you don't know where the fuck you're going. You don't have a map, you don't know how to use GPS, so all that time you spent learning how to drive was fucking pointless because you can't even go anywhere. And this is what traders who don't understand market structure are doing with their trading careers, right? You're just clicking buttons. You're on the 5-minute time frame trying to find sniper entries, completely ignoring the higher time frame bias. This is so crucial. This is so crucial in order to be successful in trading. And if you don't understand market structure, if you don't understand this key trading concept, you will never make money. Market structure, I can honestly say, is the only thing that actually matters. I know traders who make millions of dollars just trading basic market structure, basic candlestick patterns, support and resistance, no fancy indicators, none of that stuff. So for boot camp day 2, that is what we're going to focus on, market structure. What is an uptrend? What is a downtrend? What is consolidation? What parts of each trend do we want to get in for potential setup? All these things are super important, and this is going to be the main foundation of your trading career. Now, what is the real problem when it comes to most beginning traders? Most traders tend to just focus on entries, focusing on just trying to get that perfect sniper-like entry. Or they have a million different random indicators on their chart, EMAs, MACD, Bollinger Bands, all this random shit. And with all that clutter on your chart, you can't even see raw price action. You can't even see the candlesticks. You can't even see market structure for what it is. In reality, the market structure is always going to be the most important aspect when you're looking to break down the markets every single day and look for a potential setup. A huge mistake I see a lot of beginner traders do is they focus on the lower time frames only. They're too zoomed in. You're too zoomed in on the 5-minute chart, the 2-minute chart, the 30-second chart. You can't do that. You can't ignore higher time frame structure. It is the higher time frame structure that's going to tell you what the overall market is, what point of structure you're currently in, and then we go down to the lower time frames for our entry. Higher time frame bias, lower time frame entry. That is the way. I'm not saying there's anything wrong with indicators, but it's very important to remember that indicators are lagging confirmations. Indicators don't move the market. Structure does. Indicators don't move price. Structure does. Now, to make things super simple, the market moves in 3 different ways. Okay? We have our uptrend. That is when price is moving in an upwards direction. We have our downtrend. This is when price is moving in a downwards direction. And lastly, we have consolidation. This is when price is moving sideways with no clear direction up or down. Let's talk about our uptrends first. Now, the important thing to understand about uptrends are the different structure points. Our starting point is at a low. Then we have a high, a higher low. Price pushes up, breaks the previous high. Our next structure point here is called our higher high. And this is called a higher high simply due to the fact that this high is higher than the previous high. So in our uptrend, we have higher lows, higher highs, higher lows, higher highs. Now, in a perfect world, we would like to get into our trade at our higher low areas, okay? Every single higher low is a potential opportunity to get in for an entry. Here, here, and here. Let's now talk about our downtrends. Again, this is when price is moving in a downwards direction. The structure points of our downtrend is as follows. We start at a high point. Price pushes down, we get a low, price pulls back, and we get a lower high. Now, this is called a lower high simply due to the fact that this high is lower than the previous high. Price pushes down, breaks the previous low, pushes down, and then creates our next structure point. This is our lower low. Now, this is called a lower low simply due to the fact that this low is lower than the previous low. Now, this is called a lower low simply due to the fact that this low is lower than the previous low. So in our downtrend, we have lower highs, lower lows, lower highs, lower lows. And in a perfect world, we would like to get in on our downtrend at our lower high areas. Ride price down for a sell/short position. Now, me personally, I prefer to not trade consolidation. When price is consolidating, I'm going to wait for price to break out the consolidation and continue in either an uptrend when it breaks out to the top of the consolidation, or when it breaks out to the bottom of the consolidation and we start moving in a downtrend. There are strategies that you can implement where you can trade consolidation, but again, I'm not looking to trade every single day, a million times per day. I'm looking for the best quality setups possible. And for me, the best quality setups are in a trending market. Either if it's an uptrend or a downtrend. If we're trading consolidation, I'm waiting until price either breaks out to the top of consolidation into an uptrend or breaks down to the bottom of the consolidation into a downtrend. Now, the majority of the time, I am reading market structure on the H1 time frame. Okay, the H1 time frame is the 1 hour time frame. That is when each candlestick represents 1 hour worth of data. Right here is a perfect example of an uptrend. I'm going to use my path tool here, and I'm going to mark out the highs, the lows, the higher lows, etc. Right here is a perfect example of an uptrend. And as I am marking out this uptrend, high, higher low, higher high, higher low, it is very important that I say the structure points out loud to build that muscle memory. So when the time comes, when I'm looking to execute a trade, I'm not second guessing where I'm at in structure, because I already understand that in the uptrend, I'm looking for that higher low point to execute on. So here we have a nice, beautiful uptrend. And again, in a perfect world, we're looking to get in here at the higher low, here, 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 and here. We have a perfect example of a downtrend. And same exact thing, I want to use my path tool and say the structure points out loud as I'm drawing out the downtrend. So we start with a high, a low, lower high, lower low, lower high, lower low. Again, I am saying each structure point to build that muscle memory as I'm drawing out my trend. Using my paintbrush tool, I'm going to circle my entry points. I want to get here, lower high, lower high, lower high in this area for a sell to ride price down in its original trend, which is the downtrend. Now, this right here is an example of consolidation. As you can see, there is no clear direction up or down. Price is just sort of ping-ponging sideways in between areas of resistance and support, which we'll cover later in this bootcamp, what exactly that is and how we could utilize that when we're getting in for trades. I would not be looking to enter until I see price clearly break out of the consolidation, which you can see here. It does break to the downside momentarily, pushes back into the box, and then it fades into a cleaner downtrend once we're fully out of this consolidation. Here is another example of consolidation, right? But watch this. We were in an uptrend, creating higher highs, higher lows, higher highs, higher lows, pushed into consolidation, ping-ponging sideways. This is a no trade zone, but once we officially break out of the consolidation, we push into a nice uptrend, create higher highs, higher lows, higher highs. So again, ideally, when we see consolidation, we don't want to take a trade. If we want to take only the best high quality setups, we want to trade ranging markets. And if it's consolidating, wait until price either breaks out of the consolidation to the upside or breaks below the consolidation to the downside. Once you get that confirmation, go ahead and enter in for your trade. Now, the next question we need to ask ourselves is, how do we know when structure is changing? How do we know when an uptrend now wants to turn into a downtrend? How do we know when a downtrend wants to now turn into an uptrend? How do we know when price is going from an uptrend into consolidation and potentially wants to continue in an uptrend or potentially reverse and push down into a downtrend? These are all questions that need to be answered, that we need to understand if we want to be sound in the markets. So let's say we have an uptrend, creating higher highs, higher lows, higher highs, higher lows, higher highs. Now the higher lows is going to help us determine whether price wants to continue in an uptrend or potentially change into a different trend, for example, a downtrend. Now, what signals to me that price may potentially, keyword potentially, want to switch into a different trend? That is when price pushes down and it breaks our most recent higher low area. When it breaks our most recent higher low area, we call this a break of structure. BOS, break of structure. After the break of structure, what I'm looking for is a confirmation. That confirmation for me is when price pushes up, creates a lower high, and continues to push down. Because I understand that the two key structure points for a downtrend are lower lows and lower highs. So when I get that break of structure and price breaks the previous higher low and creates a lower low, that's my first sign. And when it pushes up, confirms with the lower high and continues in a downward direction, to me, I now see that we're in a downtrending market and I'm changing my bias from a buy bias to now a sell bias. Vice versa, if we are in a downtrend, creating lower lows, lower highs, lower lows, when price pushes up and breaks the most recent lower high, at that point, we get what? A high point. When we get the high point, we have now officially broken structure here, okay? Because we broke the most recent lower high. It creates the high point, price pulls back down, and I'm waiting for that confirmation, which is going to be a higher low. Once we get the higher low, in my eyes, I now see that we have shifted from a downtrend to an uptrend. So now my bias is leaning more towards buys. Not understanding market structure is one of the biggest mistakes I've noticed with beginning traders. Just not understanding these key concepts is holding you back from your trading journey and your progression. The mistakes most traders make is that they don't understand these basic market structure points and the high probability points of entry. In an uptrend, we have a higher low. In a downtrend, we have a lower high. Even worse, they're trying to counter trend trade. Counter trend trading is basically when, if we're in an uptrend, price starts selling off. It starts pulling back. You're getting in for sells. Price is clearly in an uptrend on a higher time frame, but you're getting in for sells. Why? Don't do that. Just let price sell off. Let it drop. It's just a pullback. It's just a retracement. Let it find its feet. Let it create that higher low. Once it's created that higher low, identify that, enter, ride price up for a more higher probability trade because you're trading with the trend. The trend is your friend. And lastly, like I mentioned before, trading consolidation is just not worth it. Your best bet is to wait for price to break out the top of the consolidation, confirm into an uptrend, identify a higher low, and trade that trending market, or wait until price breaks out to the bottom of consolidation, let it confirm the downtrend, identify a lower high, get in on the lower high, and enter in for that sell. Now, understanding market structure are one of the many things I discuss every single morning when I'm dropping my daily bias in the free Discord chat. So if you're not in the free Discord chat, click that link in the description below. In the free Discord, you're going to see plenty of other traders posting their funded certificates, posting money that they're making, posting their payouts, all that fun stuff. So click that link in the description, hop in the free Discord, and you'll have access to all this free information. This concludes day 2 of Blueprint Bootcamp. Market structure, the only thing that actually matters. And I promise that if you focus on learning this super imperative fundamental aspect of the market. You're going to understand price action better. You're going to get much better entries, but more importantly, you're going to be a lot more consistent and profitable with your approach and with your trading. Stay tuned for day 3 coming soon. Again, hop in that free Discord so you can be notified first. Appreciate y'all and see you guys in the next one.